Hey cousins, it's y'all favorite insurance cousin, y'all cousin Quan. And I have another one for you guys, so let's get into it. First, let me just backtrack and tell you guys about this right here. I posed a question in a marriage group, and the question was, if your spouse asks you to quit your job, would you quit? Well, I was very, very, very surprised that so many women said no. And this young lady right here, she said the reason why she wouldn't quit is because what happened to her coworker and her coworker situation. She said her coworker, her husband, he had a good job. So obviously what I'm getting from this is that the coworker was a homemaker. The husband had cancer. He had a great job. The job paid well. There was money in reserves, and the insurance, including supplemental, it wasn't enough to cover the bills. And the cancer pretty much wiped them out, and she lost her house and everything. Let's pause. She said it was money in reserves. How much money was in reserves? That's the question. First, insurance pays. Insurance pays. Cousin Quan is a cancer survivor. And trust me, baby, insurance pays. So, good thing I'm still among the living. But let's get into this right here. First of all, when you're in a relationship, most people, and they're married, they may think, oh, my husband has he has insurance with his job. That's the first thing you do wrong. Always get your own insurance. Anything can happen to that job. You can get laid off. Those that are in contracts, the contracts can be renewed. Things can change, and you never know what the policy actually covers because you're covered by your job. It'll say something like 1.5 or 10.5 your salary, but all of those policies have exclusions and clauses in there that you have no clue what they're about. You're just going on with your merry day saying, oh, we got insurance with our job, and you don't even know what it really covers. So therefore, that's mistake number one. So if you have that, why not know what you got going on? Get your own policy. If one's a homemaker and the other one is the breadwinner, make sure it's enough coverage to cover if the breadwinner was to pass away. If you have a mortgage on a home, make sure the breadwinner has enough insurance to cover the mortgage. Even if you both are working and it's a dual income household, most of your assets you require based on the household's income. With that being said, if the breadwinner passes away, what are you going to do? You're going to be back in the same situation regardless. Another thing, long-term care. Long-term care covers things of this nature. In the event someone has to go to a nursing home or we need in-home care, medicine is having us live longer. With that being said, we're living longer, and if we were to get sick, the chances of going into a nursing home or needing in-home care is becoming more and more relevant. So once a person reaches around the age of 40, long-term care should be considered. Because keep this in mind. Think about this. Husband and wife lives in a household. The wife doesn't work. The husband gets dementia. What are we going to do? Now it's out of control and he has to go into the nursing home. What is the wife going to do? Now you have to liquidate all his assets so Medicaid can even come in and help. So once he does that, she's still going to pay a small portion, and Medicaid will help with the other portion because it's based on the house of the assets. If the house is worth $250,000, they split the home down half, wife, husband, and he has to exhaust all of his assets before he can even qualify for help. And then once the spouse or the wife or the husband, once they start getting help from Medicaid, once that spouse passes away, keep in mind, Medicaid can now come back and put a lien on the house. So when mom, either if she passes away or she decides to sell, she has to pay Medicaid back for the help that she got from her spouse. That's where long-term care comes in at. So it's just more things. Insurance pays, guys. Insurance pays. The right amount of insurance. What happens in this case, I guarantee you they were undercovered. He probably had a policy with his job, didn't know exactly what it was, and then when it was time to pay out, he didn't have enough. Same thing with supplemental. It's so many different exclusions when it comes to life, home, auto. All of those policies things when they send you that declaration page and it come with all of those pages, you know, the part that we don't never read. Those exclusions and those clauses are in those policies that no one ever pays attention. And then when the insurance agent, they call and ask you to come in for a policy review, you always busy and you don't got time. Y'all better go in and get them policy reviews. So that's one of the things I want you to guys, always, every year, if anything changes, let your insurance agent knows. If someone gets sick or someone's not working or we acquire. These conversations needs to be had. They must be had. Keep in mind, the insurance agent was not at the barbecue dinner. They was not at Thanksgiving dinner, and they didn't come to the wedding and the baby showers. So when you guys are getting married, they call them life events. Just like at your job. If you get married, you get a divorce. These type of things come up, and you let your job know. So you got to let your insurance agent know too, because keep in mind, they weren't there. Y'all didn't invite them to the shindig. So that's what happened in this case. I just want you guys to open up your minds when it comes to insurance. Insurance is not tangible. And people tend to let that go out the back door and not pay attention. It's one of those things is you rather have it and not need it than to need it and not have it. Guys, this insurance thing is really, 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 it pays. Keep in mind, never, ever, never leave a house to a family member. Don't think like, he paid it off. As our parents are getting older, keep in mind, pay attention to those mortgages. Don't ever do a reverse mortgage. Never, ever, ever, because it takes assets out the family. Don't ever do that, because if the person needs to qualify for a loan, once big mama or auntie or mama is gone, if you can't qualify for a mortgage, you're going to lose that house. Reverse mortgages take assets out the family. Keep that in mind. Also, get a ladybird deed. Our parents are getting older. Get a ladybird deed, so therefore, it can transfer down to the next of kin. That's another way you can avoid probate. Guys, everyone has a probate case. It's just if you decided to file it or not. So you don't want to be in a situation to where you have a house and you don't have nothing to do with it, okay? Never, ever leave a house to a family member. Get you a trust. Trust doesn't pay taxes, but insurance, they pay you. Y'all have a good one, cousins. Cousin Quan will see y'all next time. We coming up on Breast Cancer Awareness Month. I'm giving all my pink sisters some love, and I'll see y'all next time. Bye-bye, cousins.